You're listening to the audio portion of Workshop Wednesdays. Workshop Wednesdays is a free live discussion about topics affecting accountants, bookkeepers, and business owners. You can join the ABO group in Facebook to participate live Wednesdays at 10 a.m. Pacific Time. Just search for ABBO in Facebook. This podcast is brought to you by Schoolofbookkeeping.com, where you will learn, grow, and build a thriving bookkeeping practice. We have hundreds of lessons with almost every aspect of the industry. Start your free month today at Schoolofbookkeeping.com.
Welcome to Wednesday, right there in the middle of the week.
Right?
Yep. So our topic is going to be a fun one. Sort of. I don't like when it happens, though.
What? Oh, you see yourself. You're getting alerted that you're live or that I'm live in Abo, and then it's all just, no.
I was going right into the topic.
Oh, you went right in.
Yeah,
okay.
I'm going ahead and revealing what we're going to talk about today. I don't like when people write a check and it bounces. Do you?
Right.
I mean, it's bad enough
no.
to have it happen, but when it hits the QuickBooks, oftentimes
the
our
quick tube
customers record it as income again and make a humongous mess of it, delete invoices, wreak havoc. They don't know what to do with it. And it's a disaster.
And it doesn't necessarily have to be just, the old nomenclature or the known topic of bounce checks, because it's really just when money movement gets deposited and then it comes back out.
Right.
And that can be a variety of things nowadays with ACH bank transfers. There's so many quick ways to get your money.
Yeah.
Right? So like credit card could bounce. It could be disputed. Or insufficient funds. I mean, it's really just a matter of, you've received a payment and it's gone into the bank account, and days later, guess what? It comes back out, and usually there's a fee attached to it, because that's what banks love to do, is charge you fees.
And it's a lot of work. It's a lot of work to fix and untangle and so forth. It'll probably make you not like the customer anymore, but it's a lot of work on QuickBooks. And you thought you've moved on. You thought that invoice is done. Let's go to the next project. No.
So we're going to switch things up a little bit, because normally Carrie does desktop first, and then I fly in with how do you do it in QBO. But we're going to do this in reverse. I'm going to show it to you in QBO, and maybe Carrie will walk me through how to handle it.
And why is that, Dan? Because what?
Because desktop actually has a feature called bounce check feature. And it actually takes care of a lot of the accounting things automatically, as we like to use.
Because it's painful. It's a painful process.
Right.
Okay.
So I'm going to share my screen, and here we go. There we go. Okay, so we have the situation here is Cookies by Kathy. This is just a sample company in QBO. There's an invoice here for, whoops, wait a minute. This is not the right one. Let me go back. Let me go back to the invoice or the payment. Sorry. I have the recently, there it is. Okay, wow, I don't know how I got the wrong one there, but it's Shara Bennett Design. She paid this invoice. Barnett, yes. Barnett. She paid this invoice by check, and it went into the bank. I did this all today, so all the dates are today, but in reality, typically there's a passage of time, which is why you're using these types of transactions anyway. You create an invoice, and then days later she pays it, and then days later you deposit it, and then days later, oof, it comes out.
Oh no, or oops,
yeah.
or
uh-oh. Right. So how do you track that when it comes to the bank has pulled it out of the deposit. Maybe it was grouped with other deposited funds, other checks that were deposited that same day. How do you pull out that one part and account for the fees and account for the receipt of the next, what are you going to do after that point? Are you going to charge the customer the fee? Are you going to charge them an additional fee because now there's pain and suffering that goes along with
it's pain and suffering. That's what I call
an inconvenience fee is really what it boils down to. Is like
now, heck, $20, charge him 30, 40, 50, I don't know. Cover your time for this inconvenience.
So you have to handle this manually in QBO. And there's also ways to handle it manually in desktop. You can do the same thing in desktop. But as we're going to show you, there is a quick and easy button in desktop to be able to handle those non-sufficient funds checks. So we need to set up a couple things ahead of time first, right, Carrie?
Yes.
And those are going to be some accounts.
Chart of accounts, and I like to create a bounced check, return check, whatever we want to call it. And it's usually a other current asset because you don't want this thing floating around forever. And you can call it NSF check if you want to use the soft word. But it's a current asset, and it's your
NSF returned check.
And this is simply you're going to use this account simply to throw that check in when it comes back from your bank, and then to use that to re-invoice your client to have it zero. At the end of the day, this will be zero.
Gotcha. And we want some other accounts too, right?
Yeah. So you want to do an other income when you're charging your client for this nonsense. NSF fee, kind of like your finance income on your when you're invoicing clients and they're late and you get to charge a finance fee.
All right, and we want to choose other income as opposed to regular income. Why?
Because it's not really an operating it's an operating expense, but to me it's not a good thing to budget from. You don't want to budget this stuff. This is sort of other.
You didn't go into business in order to charge your customers fees, right?
Right, and
so
the theories behind, like when you're invoicing and sending statements to clients and they're late and you charge them a finance charge, same thing. It's just you're just doing it. It's not something you go into business for.
All right, and then there's another expense.
Yeah, so I would also recommend when you do get hit by your bank to pull your NSF fees out as your expense and pull that out of your normal operating. This is drama. This is drama.
Right.
Like
you just kind of
drama.
Under. Yeah. All right. So this is the teenage daughter section of your profit and loss.
Yes, it is.
Okay.
So when your bank.
So this would just be NSF fee expense.
Something like that. Make it other. Yes.
Okay.
Let's keep this drama off of our normal.
Those are the only extra accounts we need to set up. Now, is there anything else that we need to set up ahead of time? Okay.
2 item codes mapped to this.
So we need to go to our product and service list. I
Yes.
froze there for a second. I'm like, where do I go?
Yeah, see, nice role reversal. Now go in here. A two-sided. We want to create two-sided accounts for these things. Well, I guess.
And we could choose non-inventory or service. Now, desktop, when we talk about desktop, this would just be an other charge, but there is no such creature in QuickBooks Online. So we could just choose service. And
we'll
this is
returned check. This is going to be our returned check from client, whatever you want. That's what it is.
Right. We'll just
this
call
is what's
it.
Going to show up on your invoice. So you got to kind of soften the words.
Right.
Soft, not bounce check.
So we don't want to put return check loser
no
as a description. Oh, okay.
Yeah, take that off. Return check.
Right, because that will show on your transaction. It's not taxable.
Okay, back up to this income account. Point that, if QuickBooks Online will let you, to your new NSF check. The
returned one, right?
I think
the asset.
NSF. Go back. NS. Do NSF. Yes, that's the other current asset. Bam. Yes, there you go.
Okay.
Boom.
So you still can, even though it's not an income, you can still map it to the asset account.
Okay,
Right.
now what I want you to do is create one more item code because we're going to charge our client for this nonsense. And we're going to call this the NSF fee to the customer or whatever. It's the fee for return, the processing the return check. Processing a return check. Might not be reimbursement. You might want to make money on this because it's such high drama teenage stuff. So this will be, processing return check, and then
without the loser part, right?
No loser.
No.
And then you could determine a fee on this if you want, but this points to our other income account way down at the bottom. Yes, that one. Yep.
And it's not taxable.
Non-taxable.
All right. Anything else?
Now, when your bank fee comes popping in, make sure you catch the bounce check and the fee. And the bounce check's going to go to your other asset, and the fee's going to go to your NSF other expense fee.
Right. So that could happen through the bank feed, or you could do that ahead of time. But this is the recording of the bank actually pulling out that non-sufficient funds check out of your bank and then associating a fee. Now, sometimes that could come the same day, or that could come separately, right?
A day or two. So 2 separate transactions generally.
Right. Right. So out of the checking account, this is just going to be an EFT, and then the category here will be the returned the NSF. I did everything NSF there. But it's the asset account that we're actually tracking it to. And the amount was $274.50, right?
I was paying no attention. And then in the description, I usually put the customer's name. I guess you could. I don't really tag things to customers' names when it's flying all around, but you can't. Yeah.
You can do that if you want.
Most places, it won't hurt. It doesn't hurt.
And then the fee, we're just going to assume that it's all the same.
Okay.
Transaction time, so it's $35. Whoops, not 350.
350 is usually.
That's a little steep. You might want to consider banking with someone else at that point.
They don't like it either. More than we do.
Exactly.
Now, this can also happen, the same thing with your credit cards and so forth, but we're just showing you it's typically through the bank. So you can hit the save and close, and if you want to,
and you can add more detail to it if you want in the description and the customer and the payee to make it match even better. But we're just for these purposes, we're just doing the accounting piece of that.
Yes, you can get real right in the interest of time. Next, we are going to create an invoice back to that. Whatever that client was, Barrett, Barnett, I don't know. New invoice.
Sure, Barnett.
There you go. Take this.
Here's her original invoice that was still paid. Now you suggest just to leave that the way it was.
Yes.
And then create a new invoice for the return check, because this recognizes your income. Especially if you're dealing with closed periods, unapplying this and then reapplying it, it could mess up your financials. So you're suggesting to do a new invoice to this customer. Now I'm going to copy this invoice, and then get rid of the line items because they're not actually going to be handling whatever they bought before. Now we're going to be using the returned check.
NSF returned check from client, that the second one.
There we go.
And was it $274.50?
Yep.
Of course, you had to come up with an amount that's all right. And don't forget to charge the client at least $50. I don't even feel like I feel like we're spending more than $15 of valuable time invoicing this person that will never do business again. NS fee, yes, reimbursement, processing fee, call it whatever you can to make them pay it. because you had to put time into that, and your time is valuable. Now that discount, take that discount off.
Right. We don't want that at all. We don't want to discount
No
their.
discount for that. No. And then I think you're good to save it, email it, and you're good to go. Now, the way to check to see that you untangled it right is your AR should now be back to 300 and something, and your balance sheet should show 0 for return check because we've handled it. It's not sitting out there waiting for us to handle. See the return check right there? 0. That's exactly what we want. And then the AR.
Here we can see the check that pulled it out and the invoice that put it back. So that's 0. So you don't want to have a balance in that if you haven't re-invoiced.
Right.
So if you do have a balance, then you know, oh, I gotta rebill them for that return check and map it appropriately to that account rather than revenue, because it's not real revenue at this point, because you're just dealing with
money
payment issue at this, a money movement issue.
Drama, teenage drama.
Right.
The other thing to check is to make sure your AR now that they owe you the 3 da 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 da.
So if I go back in here, it's AR.
Yeah. So your AR should include
be at the bottom.
Today.
There she is.
Yep.
So now 320.50.
324.50. So the customer owes that. And then if you look at your P&L, we can show you how that NSF drama, we made a whole $15.
We're just going to do today.
Yeah.
Just to make it a little easier. All right. So there's our NSF fee income and then the NSF fee expense.
Right.
Making a grand total of $50 out of this.
Another way that you can do that if you don't really care about this, you can do your in and out, right? In and out of bank charges. It's it's ultimately up to you. We just wanted to show you how, and this is one of the options, is to have it outside of your operating, so you're not budgeting for this stuff. And if you're reimbursing it and it's a net 0, you're good.
Yeah, I mean, there's lots of different ways to skin this cat, so to speak, but this is just one way. And the reason that you like this is that it's not dealing with your profit and loss. It's putting things in a separate area so that you can deal with that separately, and it doesn't impact the revenue of maybe a closed period, because the passage of time, this could have been in a closed period with regards to the revenue side of all that.
Yeah, if you end up touching an invoice from last year, then what do you have to do? Then you have to go amend your tax return. Those are ugly, ugly words.
Yeah. That will be more than $50.
Yeah.
Or $35.
Yeah, you need, and the wholesale. This is a customer we don't want to see again. Then go down the street. Goodbye.
Yep. Right. So that's how you handle it in QBO. So let's take a look in desktop. How do you handle the bounce checks or NSF checks in desktop? Now you can handle it the same way. I mean, you can set up exactly the same thing. You can set up those things ahead of time. Go ahead.
And the beauty of doing it the way that we showed you, the longer way in QBO, which you can do in desktop too, is I like the trail. I like to see exactly what happened. I like to see that check go in the right spot, the check go out, the time frame that it sat there, because it's not going to be the same day. I like that the transparency of the books. So the cute trick that we have in QuickBooks Desktop is really easy, and it does not provide necessarily a beautiful trail, but it's still worth showing.
Now there's some caveats that come along with this. So go ahead and bring up that payment. Right.
So you have to dig down to the payment,
and you find the payment.
And lucky for the modern technology, I went right to it, and it's Dan. Y'all, Dan's check bounced.
Hey.
I'm very mad at him right now. We're having drama.
I'll gladly pay you Tuesday for a hamburger today.
See? Watch out. All right.
All right, so there's a button.
You see button here? But Dan, when did this button show up? I didn't know it was here.
Right?
I really
can
did.
teach Carrie new tricks.
I was taught this one. So great button. And I tried to break it. Yesterday I was like, Dan, we can't use this button. It's gonna touch my invoice from last year. I even went into the preferences and locked that invoice down. The invoice that Dan found, look how long it took him to pay this invoice. July 1st. It was from last year, New Year's Eve. He promised he'd pay me that. And then the check bounced, of all things. Anyway, so I did this on purpose so you could see how it works. All right.
So here we have a $1,500 invoice that was paid by a check. Now the catch here is that the check has to have been deposited, because if it's not deposited, then it won't.
Nothing to bounce out.
It will give you a message actually and tell you. So it's nice enough to tell you that, hey, you can't do that, but you have to have recorded, because that's the reality of what happened. Is you deposited the check in reality, and then the money movement tried to happen. There wasn't enough funds to be able to make that happen, or they reached their limit or something, and then it didn't come through. So it has to have been deposited into QuickBooks, and it has to be also marked as a check.
Yes.
So if this is an ACH or an e-check or any other payment method other than marked as check itself, it won't let you click that button. Like if you changed it to cash.
Yeah. You want me to?
If you clicked it to
this point? Okay.
yeah.
I hit this.
It won't. Well, now it was, you didn't save it. That's why.
Okay.
You changed it, but you didn't save it. So it was saved as a check. So if you didn't have, if you recorded it as a cash or e-check, the button should be grayed out. So that's what typically would happen.
Okay. Anyway.
No, so if it is an ACH, then you would have to change it to a check, just so that you can have this feature. So you click on record bounce check.
Record bounce check, and
now it's gonna ask you, what was the fee? What was the fee that the bank charged you? What date did that occur? And what expense account do you want to track that to? So you don't have to set up those items and accounts ahead of time. You can just click on add new if you need to, or track it to an account that's already there.
So here's the caveat. So just FYI, this one is forcing me to do it in and out of bank service charges. I don't get to do the accounting trick that, like we said, you have choices. So this one is making me pick an expense. I actually would do this just to save time in my brain cells, in and out of bank service charges. But so that's okay to me. That's just another method. So we're going to keep the same. We're going to make a whole $15 off this teenage drama. I'm going to hit.
But you can choose, and you can choose right there. What do you want to charge the customer? So in that case, you just put in the dollar amount, and then QuickBooks is actually going to handle the rest of that on the flip side of that. So then it's going to give you a summary of the bounce check, what it's going to do. What's going to happen is this is going to actually take and unpay the original invoice, and then it's going to deduct the fees, and then it's going to offer, it's going to charge the customer again the $50. So you can see what it did here is the first line that was originally paid, the 12/31/19 transaction, is now unpaid. It added an additional $50 invoice to pay, and it's now paid the fee, or the bank withdrawal of the original $1,500 with this original check, and it's marked it with a big old bounce check stamp.
Yeah, which, by the way, you can't go back and edit this. You have to start over. High drama there. But we'll hit save and close, because we tested this and I tried to delete it. No go. So as you can see, it does a journal entry like that. And, in the behind the scenes, that's okay. I don't like people doing journal entries to AR. So.
And then it does the memo, takes the memo of what the bounce check original check number was, so that if you run a report, you can you can see that on the memo. So
okay, so now that that's done, what I was worried about was that it was going to mess up my AR. Because I said, Dan, I'm not amending that tax return. That'll be 708, whatever. It's a lot of money. Who cares how much? So, let's see. So when we look
at tax attorneys, tax preparers, they love to amend your returns, don't they?
Oh yeah. So we want to
make if it's just something as simple as $1,500.
It's still there. It's still there. So we didn't mess up. So because that invoice is still there, it's still open as of the year end, just like it was, because he didn't pay it till July. It's still there. So
that's a pretty easy button that a lot of people, including Carrie, didn't even know existed. I think it was 2019 or 2018 is when this feature actually came up. But I could be wrong, because you had to know that see that button in order for it to know it was there, or look at what's new whenever it was released. And if you skip versions, which a lot of people do, going from 2017 was just discontinued, so now 2021 will actually be coming out. If you skip over versions, you don't get the whole what did I miss since I used it last. It's what did I miss since the last version. So sometimes that's where those new features tend to get overlooked, because you're actually reaping the benefits of leapfrogging one or two or three versions of QuickBooks Desktop when you do that.
And I just thought of something too, just to point out. So I just realized something. What if this invoice had been paid in 2019 and then the check bounced in 2020? Just make sure, just always double check your balance sheet. It's a good habit. When you're touching things that cross over, make sure that whatever you did doesn't change, because you don't want to amend a tax return. So
right. So I'm going to put these two processes in the comments of the Facebook feed here, or the live that we're in the ABO group, and also if you so next week, speaking of new features, next week our workshop next week is going to be what's new in 2021. QuickBooks 2021, or new versions of QuickBooks Desktop are typically released in September. We did get a sneak peek, and if you're a pro advisor or an accountant, that should be available for you to download and install, but it's not on sale until the end of the month. So next Wednesday, we're actually going to do a what's new in 2021. We're going to go through Pro, Premier, and Enterprise, the new features that you can look for. Now, we're not going to go and look at what's new in 2020, because you should already know that. But
I usually do those every year, so I've got those somewhere else. So
yeah,
let's go on to 2021, and we'll highlight what's new.
All right, so we shall see you next week for another edition of Workshop Wednesday. Thanks for joining us today, and we'll see you next time.
Have a great week. Bye.